is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. And Andrew and I are going to have a nice little chat today about some of the big things that are going on in the world, one of our special episodes. And there's a couple of key catalysts or things that have occurred in the last little while that we think require some explaining, maybe some demystification. So the first thing is that Bitcoin and other crypto assets like Ether are clearly proving their worth as frictionless peer-to-peer money and playing a key role in funding the Ukrainian war effort, with over $100 million raised both for the government and for related causes in crypto donations. But they're also having an impact on the other side of the border in Russia, where a lot of ordinary Russians are turning to cryptocurrencies to do transactions, to store value, or even to make payroll after being basically deplatformed or cut off from a lot of American firms, not because of sanctions, just because those companies have decided to pull out of the country. So we're going to try and untangle these two different things and also address this persistent narrative out there that crypto is also being used to avoid sanctions. It's possible that they could at some point be tried in that respect, but there's no evidence yet that that is occurring. And despite that, it continues to be the key narrative being driven in the mainstream media. And also there was some big news a few days ago. The White House released its long-awaited executive order on crypto. As Winston Churchill once said, you can always count on the Americans to do the right thing after exhausting all the alternatives. And we've heard a lot about what might come in this executive order. It could be a heavy-handed approach to regulating the industry in ways that could put a damper on innovation. That's not what has occurred here. Mostly what is being recommended or prescribed is to study these things, to take a whole of government approach to figuring out a way to embrace innovation and keep America as a leader in tech and finance. So that's obviously, in our view, a very positive thing. And then there's some other stuff going on in the whole crypto world, which Andrew and I are going to try to make sense of. So Andrew, why don't we start here with what's happening in Ukraine? There's been a recent report that apparently a lot of military vendors in Ukraine are choosing to accept crypto rather than fiat. So money's been donated in crypto, and you would assume it'll get to Ukraine, get converted into local currency, and then paid out. But instead, we're seeing these vendors or these military suppliers wanting to take money and payment in crypto. What do you think that means?
Yeah, that's actually interesting. I haven't heard about that specifically. It makes sense, though, because crypto is sort of some people call it a bearer instrument, in the sense that you can actually hold custody of it yourself. And so in a situation, if you're sort of a Ukrainian business and it's unclear if, for example, your region is about to be sort of occupied by a hostile foreign force, it would make sense to not hold your assets in sort of a local bank or financial institution, and instead hold custody yourself. Which is interesting because that's kind of the role gold used to play. But obviously gold isn't very efficient in sort of a digital and global world where people expect frictionless transactions and things like that. So crypto makes a ton of sense as sort of, if you're not necessarily trusting the intermediaries that you typically use, crypto is a perfect sort of instrument for that, particularly stable coins, because you can hold your assets in sort of a US dollar denominated stable coin versus, I know for Russia with the ruble and sort of other currencies. I don't know what the Ukrainian currency is actually. Do you know what the Ukrainian?
Yeah, but the idea is basically that whether you're in a war zone or soon to be in a war zone, keeping money in an institution that could be seized is probably not the best option, right? And especially now because of stablecoins, you can store it in a way in value that is pegged to the US dollar. One of the other things that I noticed that was really interesting was that, at least according to Elliptic, which has been tracking this stuff, more donations have come from in the form of Ethereum or Ether than they have in Bitcoin, despite the fact that Bitcoin's market capitalization is 2.5, 3 times this size. I wonder why that is. I didn't prepare you for any of these questions. I'm just curious. Why do you think the Ethereum community, such as it is, or people who hold the coins at least, are dishing out more than Bitcoin holders?
Yeah, so typically people find the Ethereum blockchain to be easier to use, given the sort of the state-based structure and account structure versus sort of Bitcoin, which can actually have a little bit higher of a sort of learning curve. Additionally, with Ethereum, there's so many different assets you can use. Like I know you sort of mentioned Ether specifically, but you can send stable coins, you can send obviously Ether itself, you can convert your DeFi tokens into Ether to support the war effort. There's just so much more flexibility. And then finally, historically, Ethereum has been sort of cheaper. I don't know actually necessarily what the sort of head-to-head transaction costs are right now between Bitcoin and Ethereum. But it is definitely sort of, obviously the block times are much faster. So you can get the funds to people at a much quicker pace than using something like Bitcoin. I don't know, why do you think sort of the Ethereum community has been sort of quicker to jump to it? I sort of gave the technical reasons. I'm curious if you have any thoughts on maybe the differences between the communities or something like that.
Well, I think in a couple of instances, it's because you can only donate Ethereum. So a couple of these fundraising efforts have been DAOs where, they've been organized as Ethereum DAOs. And so Ukraine DAO, for example, raised $6.5 million. I'm pretty sure it's any ERC20 token. So it can be Ethereum and it can also be things that run on top of the network. And maybe there was some of that, wrapped Bitcoin or whatever included. But generally speaking, I think that's 10 million of it right there. But even still, if you look at the government accounts, there's a greater donation of Ethereum than Bitcoin. I can only speculate. I think Ethereum is probably more held at the individual or retail level than Bitcoin, which I think is increasingly concentrated in the hands of a lot of institutions. I'm not talking about whales. I'm talking about firms like 9Point and Grayscale and others that hold large amounts of Bitcoin. We'd love to. Personally, we've donated, but we can't donate from the fund, right? So I think that there's some of that aspect as well. Bitcoin's become so institutionalized. And I just think that, I don't know, the Ethereum community has clearly been galvanized around this issue, which I think is really cool.
Sorry, just to jump in real quick too. I think one of the other things too is I know what sort of pushed the Ethereum donations over the edge and surpassed Bitcoin was the Ukraine actually at one point was sort of promising an airdrop.
Oh yeah.
And so that actually got canceled about 5 or 6 days later. I think once people who didn't sort of donate using the Ethereum blockchain, so guys using Bitcoin or I think Tron or Polkadot wouldn't have been able to get access. And so it created kind of a bit of a conflict there in terms of some communities felt left out. And so rather than sort of leaving them out, they just canceled the airdrop entirely. I think also partly due to just kind of, it didn't seem appropriate perhaps, but I do remember that did spur a ton of donations because it essentially didn't become a donation. It became potentially an investment, right? If the amount that you donated to the Ukrainian sort of government, and then you get a Ukrainian, I don't even know what the airdrop is going to be called.
Nobody knows, but I guess what happened? So did people get the airdrop?
No, so the Ukrainian government actually canceled the airdrop, and so everyone said it's the first time ever that they've been rug pulled by a sovereign government, which is pretty interesting.
I think most people were probably okay with that. I don't know how many people were donating money to the Ukrainian government's military campaign expecting some sort of financial reward. I even those who donated after, but it would be fun just for bragging rights if they decided to airdrop some, token, which would probably become a collectible, honestly, just as proof on the Ethereum blockchain that you were one of the people that donated. That in and of itself could have value. But yeah, I think that most people didn't care too much. It was more of just like a very funny moment, the idea of getting rug pulled by a nation state. So I don't know if you've been tracking what's been going on in Russia. MasterCard, Visa, Amex, PayPal, along with Starbucks, McDonald's, Coca-Cola, and virtually every other Fortune 500 company have pulled out. In some instances, they have cut off access. In some instances, this is sanction related. For example, cutting off Russian banks. But the vast majority of what we're talking about here is just a voluntary decision by companies to remove themselves from the country, whether it's because they don't want to be seen to be enabling the regime or they don't want to be worried about the bad PR. I don't know. It's probably one of those two things. Crypto companies have stayed in Russia. And Brian Armstrong, from Coinbase, and Jesse Powell from Kraken, and all these other CEOs have basically said, we believe that people who are in some cases suffering under this regime should be allowed to access our services and financial services in general, so long as it's lawful to do so. We believe that is sort of a core idea, that they shouldn't be punished for the actions of their government. And they've taken some flack for that, but overall, I think that they've made the right call. I don't know how you feel about that.
Yeah, no, it's a good point. I think Brian Armstrong in particular has written a ton about sort of the mission and the vision of Coinbase. And to him, crypto is the biggest enabler of economic freedom. And that's the main sort of value prop of crypto to him, is essentially sort of being a vector to increase economic freedom globally. And economic freedom is sort of related to this idea that is sort of related to what people call sort of the country lottery. So the idea that if you're sort of born in certain countries, your economic prospects are much less than if you're born in other countries, which is sort of obvious in a lot of ways. But by increasing economic freedom, you actually reduce that sort of you make things a lot more fair, in the sense that if you can, anyone interacting on the sort of the global crypto network is equal to one another, because no one really knows what country you're from when you're doing peer-to-peer DeFi transactions or peer-to-peer sort of wallet transactions or anything like that. And so in a world where sort of increasing shares of economic commerce are happening peer-to-peer on a crypto network, then it essentially levels the playing field for everyone, because everyone's using the same sort of financial system, everyone gets the same sort of property rights, at least when it comes to crypto assets. And so at least for Brian, I know that this idea of sort of stopping business with certain people goes completely counter to his whole sort of mission and vision of what crypto is going to be. I'm just kind of reading through the article. He talks about how, for example, crypto should be unbiased. So it shouldn't matter where you live or what your race or gender is or anything like that. And then one other point I just wanted to touch on, because I think this is sort of what Jesse was talking a little bit about, is that crypto enables people to be mobile and leave. And you're sort of seeing this a little bit with sort of the so-called Russia brain drain, which is essentially over the last couple of months, some of the smartest people in Russia have been leaving the country because they just don't agree with what's happening in the Ukraine. And so crypto is an incredible enabler of that, because unlike your house or even really gold to a certain extent, you can all of your crypto assets are very easily movable with you. You can literally just have a piece of paper and if 95% of your assets are crypto assets, you can just move and it's not a big deal, which is obviously not the case with sort of traditional assets.
Yeah.
I'm curious. I don't know. I'm curious what you think on this though, because I think at least from the Brian Armstrong angle and the economic freedom, I think I kind of agree with it to a large extent.
I do too. I think the point you made about crypto being portable is interesting. Something like a house, not only are you not the bearer of your house, but your house ownership relies on the legal regime enforcing your right to own that property, right? It requires property rights. And that's something that is true of almost every asset, right? There's a line that's been going around basically, which is that if your asset is someone else's liability, then it's not really an asset. Meaning if your asset depends on someone else paying you back a loan, or a bank that's holding your money as a deposit, actually allowing you to access it or what have you, then it's actually not an asset. So the only assets really are the ones you can hold. And the only one that you can move in any quantity is crypto. And I think that's sort of a fascinating thing that's emerging from this whole crisis. I think it's worth mentioning, just to clarifying for people, that Kraken and Coinbase and these other American or Western firms are enabling ordinary Russians who are not under sanction to continue to access their services. They are complying with all of the sanctions laws. After all, it's the law. They're not going to do something that's illegal. And so we want to just make sure people understand the distinction. We're not talking about enabling, Putin and his cronies to use crypto as a way to evade sanctions. We're simply talking about ordinary people being able to continue to access basic financial services via crypto. On the question of sanctions specifically, the main narrative that's been going around has been all about Putin and his cronies using crypto to avoid sanctions, despite the fact that there's these amazing stories going on. The really big fascinating things to me are the fact that a government has taken crypto donations and has gotten into the tens of millions of dollars to fund the war effort. Equally interesting to me is the fact that military equipment suppliers and other vendors are accepting crypto and preferring crypto. That to me is fascinating. Also really interesting is the fact that ordinary Russians are turning to crypto because they are cut off from traditional financial services. The least interesting thing to me is speculating over whether or not Putin may or may not use crypto as as a way to avoid sanctions. And right now, at least the Treasury Department, FinCEN, and other major agencies in the US government have said they're not concerned about this. They've said there's no evidence that it's being used for this purpose, and also that it's probably not that great a tool. Because any oligarch or government or billionaire is going to be moving vast quantities of crypto, and that's going to become immediately apparent to on-ramps and off-ramps, and also to blockchain analytics firms like Chainalysis. And then the other thing is that crypto may be frictionless and peer-to-peer, but it's not totally anonymous. Like there's still wallet addresses, and combined with other information, you can actually pretty easily identify where these things are coming from. So it's actually a great tool for, at the individual grassroots level, to get money into places where you couldn't because there's no financial rails or because it's a conflict zone or whatever. It's great as a way to fund things that are also maybe unpopular or sensitive, like the convoy protests here in Canada. And it's probably not such a good tool to be used by governments and oligarchs to move vast quantities and avoid sanctions. So I think that's something that requires clarification. And I know I sound like a broken record. I've been writing articles about this for the past month, but people seem to forget that there's things that are happening in the real world based on fact and experiences. And there's pure conjecture and speculation, often, pushed forward by people who have an alternate agenda, like Elizabeth Warren, who wants a broader crackdown on crypto. And they're not based in facts. So let's just make that distinction. Anyway, I digress. So on the subject of government and lawmakers, there's been a lot of hand-wringing and soul-searching and confusion and concern about this executive order that Biden released last week. In the lead up to it, everyone was worried that, it was going to be the regulatory smackdown was going to land on the industry or something horrible was going to happen. Is that what we ended up getting in the end?
No, not really. A lot of people in the crypto industry sort of thought it was the sort of best case outcome in terms of what came of it. It was essentially just an order to study the industry and sort of come up with directives and orders and things like that. I think you're actually even the better person, because I know I sort of read you had an article in the Financial Post, or at least were quoted in the Financial Post talking about this. What was your take on it?
Yeah, I think it was a mixture of relief and enthusiasm. I think probably it was a pretty neutral document, and the proof is in the pudding. Just look at the way the market has continued to kind of trade sideways since that has happened. There wasn't there was a relief rally, but it was short-lived. And we're sort of settled back into this range that we have been for a while. But the fact is, no news is sometimes good news. And in this case, what we saw was a government that is taking a really thoughtful and serious approach to a technology that could prove really important to that country, to maintaining their lead in technology, to maintaining their lead in financial services. And I think that the executive order is a big positive. Maybe it's not reflected in the price right away, but over the long run, I think it's going to help to set the table and set the stakes for the engagement between industry and government. So just to give everyone a bit of a background, this executive order basically mandates what's called a whole of government approach. So it requires all federal agencies to come up with a plan as it relates to crypto. The priorities are to promote innovation, to maintain leadership, and also to address, risks to consumers, risks to the climate, risks of illicit activity, and the like. All things that are, in my mind, very reasonable and things that should be reflected in the laws and in the regulations. So overall, a very big positive. Long term. In the meantime, sort of a no news is good news in terms of new rules and regulations.
Yeah, and you talked about, because I was reading the article earlier, and you sort of talked about how you're hoping Canada can be kind of a fast follower. What's your take on sort of how Canada has been sort of navigating the space, whether it's continuing to be a fast follower as it has historically been with sort of new fields of technology?
Well, I think that Canada should take should glean a lot from this decision by the government to announce this whole of government approach. So far, the Canadian approach has been somewhat scattershot. The securities regulator in Ontario, the OSC, has approved Bitcoin ETFs and has shown a lot of openness to this space, and that's great. But in other parts of the economy and other parts of the government, it's not totally clear that there is a whole of government strategy as it relates to crypto and as it relates to blockchain as well. The US can succeed in spite of its government. The government could have come out with something that was punitive or gosh, like who knows, something bad. And people would still stay in New York and San Francisco and Miami and continue to build companies and do stuff because it's the States. Canada and other countries don't have the same benefit. But that's also what seems like a risk is also an opportunity, because what it does is it allows us to turn that on its head and say, what can the government do to actually promote and encourage investment and innovation in the country? One of the things it can do is to show that it's serious about the space. So taking a whole of government approach to regulating, but also becoming a model user of technology and creating incentives for companies and innovators to come here. In the government of Alberta, they've done a lot in this area, and I'm quite excited about what I think they're going to continue to do, which is to encourage not only Bitcoin mining, because it's an energy powerhouse, but also innovation around these different areas as well. So I think there's more that government can do in Canada. And I think right now it's acting as a drag, but it could be a tailwind if we can get our act together.
Yeah, totally agree. I think, I know you sort of talked a little bit about this as well, but should we shift focus now to the news out of the Luna ecosystem? We obviously had Charlie Morris, who's a seed investor in Terra Luna. And we've been talking a lot about Terra Luna. Do you want to just kind of give the audience a quick recap of the big news, or I guess not even big news really? I
don't really know that I'm the right. I think you're probably better suited to talk about this, because this is like some deep crypto stuff that I think maybe I'll set the table just by saying we've talked in the past about layer ones, so things that compete with Ethereum or try to do what Ethereum does, but improve upon it in certain ways. And because of Ethereum's success, there's been an opening for other platforms. And Terra Luna is probably one of the best known ones. It went from probably being ranked, 80 or 90 to being a top 7 coin in the last 7 to 10 months or whatever it is. So it's had a meteoric rise, and that's driven a lot of attention. It's got a very charismatic and colorful founder, Do Kwon, who's sort of like I don't know how to describe it exactly, but he's a big deal on crypto Twitter. And he and others have been getting into an argument or a debate about Luna's prospects, which has led to a wager. So why don't you talk about that, Andrew? I don't know if we can glean any kind of big points out of this, other than, or if it's just something interesting to talk about.
Yeah, so Terra Luna has been one of the fastest growing crypto assets essentially in the entire world over the last 12 months. And it is essentially an algorithmic stablecoin. And the way it works is there's two currencies. So there's UST, which is the actual stablecoin. UST is equal to $1 at all times. And then there's Luna, which is the sort of native token of the Luna network, and also is it backs UST. And so the way that UST keeps its peg is at any point you can exchange one UST for $1 worth of Luna. And as the price of Luna increases, more UST is minted, and it leads to this highly reflexive cycle where as the price of Luna goes up, more UST is minted, which increases the fundamental value of Luna, therefore increasing the price and leading to more UST. So you can see how it's kind of a cycle. And so a lot of people have sort of described this relationship as kind of a Ponzi scheme. I don't know if it's necessarily a Ponzi scheme. I think it's
a
just
word we love around here to describe parts of our industry. Yes. Sorry, go ahead.
Yeah, I don't think it's really a Ponzi scheme. I think it's more just a highly, highly reflexive cycle. Reflexive is sort of this term created by George Soros in his book, Alchemy of Finance, which is the price of the asset directly impacts the fundamentals, which therefore impacts the price. And so it's a positive feedback loop. And so Terra definitely has that. And it's used it to its advantage. And at the same time, Do has been raising tons of money as a huge war chest to essentially also back the price of UST and sort of support the network.
And it's become one of the biggest buyers of Bitcoin as well, right?
Yeah, exactly. Everyone calls him the new Michael Saylor because he's exactly like you said. All the money he's raising by selling Luna, he's using to go and buy Bitcoin. Anyways, one of the big sort of demand drivers for UST is there is a 20% fixed APY you can earn from this lending protocol called Anchor, which is on the Terra Luna network. And those yields, that's kind of the big thing that people have been pointing to, is saying those yields don't seem sustainable, given that sort of roughly equivalent yields on other networks are far lower. And that 20% yield is being sort of subsidized by Luna. And so a lot of people think that because that yield is unsustainable, at some point it's going to come down, and then you're going to have sort of almost like a bank run type situation where people sell their Luna or potentially the price of sell their UST, which then therefore means people will swap it into Luna and sell the Luna and sort of lead to a negative feedback cycle. I don't know. I actually don't have necessarily a strong opinion on this. I do think the yield seems unsustainable, but at the same time, they're building tons and tons of new use cases for UST. And there's more and more apps coming on top of the Luna network, which therefore creates like other drivers of demand. And so it's kind of, and on top of that, as the stablecoin gets bigger, it makes it more attractive for other sort of apps to plug into it. So I do see the bullish case on it. And moral of the story, it's a very controversial sort of asset. And this big crypto trader bet Do $1 million that the price of Luna would be less than $88 a year from now, using this sort of famous guy on crypto Twitter called Kobe to act as the escrow agent. And then what was pretty funny is that another sort of anonymous trader on crypto Twitter called GCR raised the stakes and bet $10 million, which Do also accepted. And so now Do has an $11 million bet at 1-to-1 odds, so 11 million to win 11 million, that the price of Luna is going to be above $88 a year from now. And I'm just looking at CoinGecko right now, and the price of Luna is about $91. So it's, anyways, it just kind of captured everyone's attention. The reason why it was interesting to me is that it just shows how much conviction the founder of Luna, Do, has in his currency, and also it's just very entertaining to watch. I don't know. I don't know if you've been sort of following the bet as well. Like,
I've been following the bet. I thought that was helpful because that was a masterful description of exactly how Terra and UST are related and what the role of Anchor is and all of that. And that was actually just a great dissertation on DeFi or a component of DeFi. So I thought that was really helpful. Yeah, I just think it's really funny that the intermediary Kobe, this guy, kind of like as a joke, kind of said he would do this, and now all of a sudden, like he woke up one morning and someone had put $10 million into this account to take the other side of this bet, and Doe took the other side. I mean, I don't know what it shows. These people have a lot of money, they have a lot of conviction. There's a whole world going on that people aren't paying attention to. None of this will be written up in the Globe and Mail or the Wall Street Journal, I can assure you. But it's certainly a lot of action is going on Twitter. I think that's probably it for us, Andrew. That was a good chat on some key stuff. We'll be back next week with guests and the week after. And it's setting up to be a really great couple of months here of guests. So please continue to stay tuned to DeFi Decoded. We'll cover everything that's going on in the world, big ideas, talk to some leaders, and continue to discuss, some of these key themes like we did today. So Andrew, thanks a lot. And everyone, we'll see you next time. Take it easy.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.